We have a question that's coming in on our website. Firoz Bojani has written in. He says he wants to sell his house that he bought in September 2013. Now he will use these proceeds to fund his new house. The cost of this new home is higher than the older one. He also plans to take a home loan of 8 lakh rupees to fund this house. Now he wants to know that since it amounts to short-term capital gains, he's selling this property before the 3-year deadline. Will he still need to pay tax because he is reinvesting it immediately in a home that is costing much more than the earlier house?
The problem here, Firoz, is that Section 54 of the Income Tax Act, which allows you to claim set-off in respect of reinvestment of capital gains in another house, comes into play only if your capital gains are long-term in nature. So since you purchased this in September 2013, if you purchase this in September 2013, I suggest that you wait for another 6 months, let it become, long-term capital gains, and then go ahead with this transaction. Because when it is short-term, you are not eligible for any benefit, and you will actually be taxed at, assuming you're in the highest bracket, you'll be taxed at 30% on these gains.
Right. Vinay, you're saying wait for another 6 months.
I mean till September, so that he completes 3 years, 36 months of holding.
So exactly. So he can wait till September and say in October he can go ahead and reinvest that money in the new house, right?
Absolutely.
Right. So you just have a couple of months more to go, and it makes much more sense for you to hold on rather than pay that the 30% tax that you would have to pay on short-term capital gains if you choose to reinvest that money right now in a new home. If you choose to sell that older home right now, so just hold on for another couple of months if possible. You'll save much more money that way.